Good morning. Today is Friday, April the 14th. The time right now is 11:34 in the morning, and overnight on Wall Street, we still see elevated equity prices in the US, and that is likely to be the underpinning for all global equities. However, we have seen how the market has been behaving, and the market is actually preempting that the idea that the Fed may have already hit its terminal rate that's getting ready to pivot. So there has been the reason behind the rather strong equity prices. Of course, on top of that, we see inflation has been coming down this week itself. On Wednesday, we see CPI numbers in the States has been lower than expected. The headline numbers came down to 5% from 6% in February. So there's a good news. And of course, last night we have the producer price index also went into negative for the first time in 2 years. So we can see that by and large prices are coming down. So that is giving the market the idea that maybe the Federal Reserve ought to pause and maybe even pivot. So that is underpinning the equity markets. So when we look at Asia, we want to see whether we see the same phenomena that we are seeing in US equity. Over in Hang Seng, this is what this chart is all about. This is the 4 hours time frame. You can see that the Hang Seng has actually hit its year high late in January itself at 22,700, and he has since been sliding, and he has been sliding for almost 3 months now. Now, somewhere in the last week of March, we can see that the Hang Seng itself hit a bottom at 18,829 and started to rebound. And this rebound has taken this index to a high of 20,750, which is on Tuesday, okay, on last Tuesday. So this high has been reached, and since then, this entire week we see prices has been sliding again. So that gives me the idea when you look at the chart here. Of course, this is the 4 hours time frame. The rebound from 18,829 unfolds in a three-wave classical rebound, and anything that is three-way, whether it is a rebound or whether it is a correction, typically points to a correction, okay, a corrective move. Now, when we look at a corrective move, what it means that once the correction is over, then the dominant trend is going to exert its pressure all over again. When we look back at the early part of the year, we can see market was basically coming down. So the medium trend is still down, okay? So that means the rebound that we saw starting from March 20th all the way to last Tuesday could possibly have ended within this price range of 20,800 to 21,100. So although it did not quite hit the price range, but the price action does suggest that if it's more likely that the market may have already peaked, means the correction may have already been over, and the market right now is getting ready to resume its large what I call the dominant trend for now, which is suggesting that it will probably slide downwards. If this is the case, I think the market has a potential to go down all the way to 18,000, perhaps even lower to 17,400. So this is basically my outlook here. So you can actually use this as a reference point if you are trading the Hang Seng Index. Thank you very much. This is all I have for you. I will see you again on Monday. Bye-bye.